Hello investors. In this video, I will break down OXY's latest quarterly update. Let's get into it. Let's begin with Stratos, their first low carbon venture facility. There are three updates. First is that it is currently moving over to operations and is on track to start capturing CO2 this year. Second is two additional commercial agreements for CO2 removal were signed with JPMorgan and Palo Alto Networks. The majority of volumes through 2030 from Stratos are now contracted. And third, because President Trump's big beautiful bill, a potential $700 million to $800 million reduction in cash taxes with roughly 35% expected to be realized in 2025 and the remainder in 2026. I am very excited to see Stratos coming into operation. Hopefully this bet will pay off greatly for OXY. It is like seeing Amazon's AWS bet in its early days. We will see how this will turn out for OXY. Next is Warrants. On March 3rd, 2025, OXY announced an offer to exercise its outstanding publicly traded warrants at a temporarily reduced price of $21.30 per share with an expiration date of March 31st, 2025. In April 2025, OXY issued 41.9 million shares of common stocks in return for proceeds of approximately $890 million. The proceeds from the warrant exercise were used to repay near-term debt maturities. And as of June 30, 2025, OXY had 32 million outstanding warrants with a strike price of $22 per share. I love this offer that OXY made because it saves them a lot of money. For example, the $890 million they raised from this is used to pay off debt completely. Assuming 6% interest on the debt, 6% of $890 million is approximately $53 million annually. Since warrants don't expire until August 3rd, 2027, warrant holders are not motivated to exercise it until the date is near, which means having $890 million additional debt for 2 years from now will end up paying around $106 million in interest. Now, on the other hand, a 70 cents discount on warrant only costs OXY around $29 million in total. If you do the math, this move alone saves OXY around $76 million. Next is $950 million of additional asset divestitures. $370 million is already closed, and $580 million is expected to close this quarter. I'm actually very glad to see that more divestitures is happening to pay off debt. This was part of their original plan to sell $4.5 to $6 billion worth of assets after CrownRock's acquisition to pay off debt. So it's not a surprise, including this $950 million. Now they have divested $4 billion in total. We will probably see another $500 million at least in the coming quarters. In fact, I actually prefer if they sell up to entire $6 billion instead of $4.5, so they can improve their balance sheet faster. Now let's look at their financial statements. So far in 2025, OXY has been producing around 1.4 million barrels of oil equivalent per day. Production is similar in Q2 compared to Q1. However, the 6 months ended this year is up quite a bit compared to 2024. This is because of the CrownRock acquisition they made last year. The average price for oil has been down quite a bit this year. WTI has averaged around $67 versus last year's $78, Brent around $70 versus last year's $83. Natural gas, however, has been up quite a bit. It has currently averaged $3.65 versus last year's $2.17. Hopefully the oil price will go up in the coming months, but this is not something that we can really control. Now on oil and gas revenue, looking at this Q2 versus Q1 data, the revenue decreased slightly, which is expected because the oil prices are lower in Q2 than Q1. However, if you look at this 6 months data versus last year, although oil prices are lower, the revenue is up. This is because the additional production volume that Crown Rock acquisition has brought. Earnings have declined from $550 million to $398 million for 6 months ending this year compared to last year. This is because the market is currently oversupplied with its chemical products. Next, onto its midstream and marketing segment. This segment actually lost $28 million so far this year compared to the earnings of $83 million last year. This was mainly due to losses from equity method investees and higher expenses on its low carbon venture. Now let's look at their balance sheet. Currently, they have around $2.3 billion of cash on hand, and they have a total debt of $23.3 billion remaining. Here, they stated that they have repaid an additional $700 million of debt after this quarterly filing. Therefore, they have around $22.6 billion of total debt left if you use this $23.3 billion number as total debt. The $21.4 billion that's stated down here is from deducting the $700 million from this total borrowing at face value number here. So it really depends on which number you want to use. And that concludes Oxy's Q2 2025 earnings results. The two things that I will be watching is one, how fast are they reducing their debt in the coming quarters? And two, how their low carbon venture will perform as Stratos ramps up. If you found this video helpful, please give it a like. It will really help me and supports the channel. Also, don't forget to subscribe so you don't miss my future videos. Thank you for watching. Have a good one.